Stock futures were up ahead of the bell as the damage from Hurricane Irene wound up being less than originally predicted. So joining me now to break it all down is Bloomberg's Sheila Damarajan. Good morning, Sheila. How'd you fare in the storm?
You know, I was very lucky and I fared okay, and I hope the same for you, Stephanie.
Absolutely. And Wall Street seems no worse for wear. What are the impacts, if any, of Hurricane Irene?
Yeah, look, what a weekend it was, right? Irene coming up to the northeast coast, and obviously there was a lot of damage there. Here is the good news. The good news is all the economic damage from Irene is less than expected. A lot of numbers being flown out there right now, still being calculated and tallied, but one of the numbers we did get from Kinetic Analytics is that the estimated loss in terms of an economic impact is about $7 billion. So yes, it is a big number, but that is a forecast that has actually been brought down from last week's estimate of $10 billion. So some very good news there. You know, I will point out a lot of that economic impact happened right here in New York City. You know, you think about the weekend, restaurants were shut down, stores were shut down, all the Broadway shows were shut down. So certainly a lot of losses in terms of the economy there. Power, that is one of the big things that everyone is focused on right now because there are still plenty of folks out there without power in their homes. In fact, in the New York area, we have about 700,000 homes without power. In New Jersey, about 300,000 homes without power. And also in Connecticut, you have hundreds of thousands of homes there without power. So you want to keep your eye on some of the utility companies like PSEG, like Con Edison, because all of those workers will be going overtime to get that power up and running. You know, airlines was another big area that people were focused on because there were hundreds and thousands of flights canceled over the weekend. You know, all these airlines are now putting their schedules back together. In fact, if you go to LaGuardia, you know, flights were starting out of there at 6 a.m. this morning. You know, some of the airline representatives are saying that the cost of Irene now in the millions. So that is some very good news there. You know, they're really likening it to a snowstorm or some major delays, nothing in terms of the catastrophe. So a lot of good news in terms of the economy, in terms of the economic impact, that it is less than expected. But of course, Stephanie, we are still in recovery mode from that. There is still billions of dollars lost here over the weekend.
Right. Loss of human life as well as a loss to property for millions along the East Coast, but not the huge impact that we thought we were going to see on the markets.
No, absolutely. And I mean, look, the markets are back up and running. New York Stock Exchange opening as planned this morning. You know, they had this great contingency plan in place. It's certainly working out right now. I think the bigger issue is if a lot of the traders and if a lot of the employees are going to be able to make it in this morning. You are hearing reports of several people deciding to stay at home today and work from home because it's just a little too tough and a little bit too messy to get in the city. But yes, as of right now, markets are open. I think everyone is breathing a huge sigh of relief that it certainly turned out the way it did and wasn't as bad as it was meant to be.
And, you know, the market's optimistic as well, Sheila, because we ended last week on a high note after Ben Bernanke's speech. Will we continue to see effects from that? And what did he say that made investors more optimistic?
Well, yeah, I mean, we're already seeing the impact of that, and it is holding over to this week. Another great sign. If you take a look at the markets right now, they all open to the upside. S&P, Dow Jones Industrial Average, the NASDAQ, all up above 1% on the open. You have a lot of the big financial companies like a Bank of America or a Wells Fargo or JP Morgan rallying. So some good news there. And it was all, of course, after Bernanke's big Jackson Hole speech that was highly anticipated. And here's what he said that comforted investors. He said that the economy is not weak enough to warrant another round of stimulus. He did acknowledge that we have problems and that things were slowing down, but he did expect the pace of the economic recovery to start to rapidly quicken in the second half of the year. So that's some good news. I mean, if you have the Fed chief himself saying, look, things may not be great, but they're not weak enough that we need more stimulus. There's a lot of comfort in that investors took, and we are seeing that reflected loud and clear in the markets today. It is a day of green on the screen, Stephanie.
Yeah, up 160 points almost. And I wonder, Sheila, I have some breaking news coming down from the wires that consumer spending grew in July by 0.8%. That's the largest amount in 5 months. So I imagine that might also bolster the markets today.
Absolutely. That was a huge kick to the markets this morning. Basically, we are getting signs that July, so the first month of the third quarter, is getting off to a good start. As you said, those personal spending and income numbers coming in higher than expected. A lot of people are dipping into their savings to start spending again. That is certainly good news for the economy. Remember, consumer spending is about 70% of the U.S. economy. As for what they're spending on, Stephanie, they are spending it on cars. Remember, a lot of the car production was slowed down during the aftermath of the Japanese earthquake, so we did have some supply issues there. Now, as those things are starting to get cleared out, more cars are coming back into supply, and people are buying them. That is certainly good news. You are also seeing people go to the stores in terms of the malls and a lot of especially retailers. Retail sales have been coming in better than expected. So the very good news is that folks are back to spending again, and that is certainly giving markets a lift as well.
All right, let's talk about some administrative stuff. President Obama has chosen Alan Krueger to replace Austin Goolsbee as head of the Council of Economic Advisors. What do we know about Alan, and what are we hearing about this move?
You know, it was widely expected. You know, Alan Krueger's name has been tossed around for a long time now, so I don't think it was a really huge surprise to the market that the appointment became official. Here's what we know about Alan Krueger. He was a professor at Princeton, so he's a professor of economics over at Princeton. This certainly isn't his first dalliance with the White House. In fact, he did serve as chief economist for the Treasury about 2 years ago. During his tenure there, he really focused on the country's stimulus program. So a lot of the things like tax credits, the Build America bond program, that was really part of his doing, so he focused quite a bit on that. Here's what I find most fascinating about Krueger's appointment, Stephanie. If you take a look at his work at Princeton and what he really focuses on, it's the labor market. He is an expert when it comes to labor markets and unemployment. And with unemployment hovering around 9.1% here in the U.S., there is no doubt that his focus will be solely on that, perhaps one of the big reasons that he was chosen for this role.
Well, I could understand why they would want somebody who's an expert on labor and jobs. Sheila, we have time to talk about one other thing, and that's pending home sales. Are we seeing any light there?
Unfortunately not. You know, there's certainly so much good news in the market coming from other places. Housing remains a huge drag on the economy. We're going to be getting those pending home sales number at about 10 a.m. this morning. And unfortunately, we are set for another decline. So housing still certainly the black part when it comes to the economy in terms of the negatives of what is dragging us down. We will be tracking those numbers, and who knows, it may be one of the things that could bring this rally down. But for now, markets are higher. People are breathing that sigh of relief, and things are looking good, at least to the start of the day today, Stephanie.
The sun is shining over Wall Street. Sheila Damarajan from Bloomberg. Good to see you, Sheila. Have a good day.
Good to see you.